This conference will now be recorded.
Good afternoon, everyone. Quick sound check. Hey, Donna, Amy, everybody. How's everything going? Recorder is already up and running. Eddie, Pritesh, Vince. So let's get started. Welcome to this edition of Traders Exchange. As always, everything that we're going to be talking about today is going to be for educational purposes only. Nothing is intended to be any type of investment advice. So now that we have that out of the way, so basically I want to just give you a topic. We're not even going to go over this. Well, we're going to go over stocks from today, but we're not even going to go over what we saw in our trades today, because what I want to do for this class, we're going to scratch the surface of what we're going to be talking about in our classes that are coming up after Labor Day. Okay, what we're going to be, I'm going to be teaching you guys a set of rules based off of expectations and price targets. All right. So I know that sounds pretty straightforward, but it really isn't. There's a lot that kind of goes into this. And I know a lot of you guys are using options and using overnight plays from what you see in the prints. And then like myself and most, and a lot of other people out there, we're using these as day trades. So we're going to go over both. Okay. I'm not an options trader, but I can give you a pretty guaranteed set of rules on things to not do. And we're going to talk about both aspects of what we see and how it affects a day trade and how it's going to affect an overnight trade. AMD is going to be one of the biggest ones that we're going to use, and then we're going to use CRON as well. I don't even know if I got any questions today, but I don't think we'll have time for them anyway, because we're going to be hitting this pretty hard. So anyone out there, anyone that's on any call, on anything that we've seen so far, that's been a little bit ahead of the actual trade itself and finds himself coming into the red a little bit before the stock ends up making the inevitable move that we know, this class is going to be for you. Okay, same thing with day trading. Anyone that's getting shaken out a little bit, this class is going to be for you. We're going to set up a specific set of rules. So what's going to happen is that after this, first of all, the one thing I can guarantee you is every single person right now should have a pad out and a pen or a computer or whatever you want to take notes on, because after this, when you guys ask a question, you're not even going to have to ask a question anymore, because they're going to be definitive set of rules on what you see and what your expectations versus what the price target is going to end up being. So let's talk first. And another thing too, I'm going to be asking a lot of questions. So definitely, that's just the way that I teach, and I'm sure you guys noticed this by now. I ask questions specifically because of the fact that I know me personally, when I answer a question, it helps to keep it in my mind. That's the reason that I do this. So I'm going to need a lot of back and forth for what we're going to be going over. All right, let's talk about price target. Let's talk about first price target, and then we're going to talk about the definition of what an expectation is. What's a price target? Very simple question, and it seems like a simple question, but there's a lot more that goes into it than just what a definition of a price target is. But what is a price target? Okay, if we had to define exactly what a price target is, what would it be? And obviously, I'm not just looking for specifically the fact that a stock is going to get to a price. There's more that's going to go into it. But when we talk about a price target, what defines a price target? Where we should take profit, absolutely. That is absolutely part of what we, a price target, because that's the price we expect the stock to get. But what causes us to have a price target? Okay, an expectation and a price target are actually two different things. Expectation on move based on the print and volume, and that's exactly what it is, Amy. A price target is if something happens, a market maker does something that they have to get to a certain price to make money off of what they showed us. For instance, if we see 5 prints on the ask come in at $5, our price target is going to be what? It's going to be $5.50, right? We're going to assume our 5 prints that come in, that's not a huge move, but we're going to our price target, is $5.50, because that person that came in and bought with the 5 prints over 1,000 at 5 is telling us they need to make at least 50 cents, right? So our logical price target in that specific scenario is 550. Okay, everyone with me so far? Okay, this might be obvious, it might sound stupid, but believe me, we were going to get into a lot more advanced things in a minute. Okay, and this is very important. So our price target is 550. That means that we know that the person that bought needs to make money. They need to make at least 50 cents. And I'm using 5 prints right now. We're going to use more prints. We're going to use exact examples with AMD and with CRON. Okay, but that's what our expectations. What if we saw 10 prints at 5? Now we have 10 prints. What is our price target? 10 prints at $5. Yeah, six is illogical. We're thinking now about $1. Thinking the 10 prints. Remember, the more money that somebody puts into something, the more the stock has to move. Okay, if you see someone go out there and and buy 5 prints, that's nothing crazy. That it's a shorter term trade. Remember, we can kind of manage how big a stock is going to move from how many prints we actually see. Now we get up to 10. Now we're thinking 75 cents to $1. Now we're still going to watch it at 550, but our overall price target is going to be around that 6 area. Now, does that mean if it hits 584 that it still needs to move another 16 cents? No, of course not. There's no, unfortunately, there's no exact formula for stock trading. Okay, it's going to be around $1 if it hits 90 cents, 84 cents, 99, whatever the case may be. It's going to be around in that area. Remember, if my price target is $1 for a stock to move, okay, am I ever going to try to get the entire dollar on that move? Is that a good method for me to use? Absolutely not, because when a stock gets to what its price target's going to be, we're going to start to see selling underneath it. Remember, if a stock moves $1, I use literally for every dollar, and I mean this is kind of on erring on the side of caution. Now, sometimes I do it a little bit different, yeah. But you got to figure every dollar a stock moves, you should be able to make 60 cents on it. Okay, so that if this, holding too long and being exposed too long, we don't ever want a full position being exposed for an entire dollar. So when we get up to, let's say, 75 cents and we start to see a little bit selling coming in, yeah, we're not going to get out of our whole position. But what we're going to do is we're going to start taking off some of that position and locking in that profit. Because if a stock should move $1 and you try to make $1 every single time, you're going to get caught up in those positions where you see that big sell-off coming in. Exactly, Dave. The meat in between. That's what we want. Okay, we want to make, if a stock moves $1, we want the big, a big part of that dollar, but we're not going to always try to make that dollar. That is a rule you should live by. Trying to make an extra 20 cents on a trade when it only has 20 cents left is actually going to cost you money in the long run rather than make you money. Because you might get it one time, but then the next 5 times what's going to end up happening is you're going to get caught in that sell-off and actually lose parts of your profit. Exactly. Tops and bottoms are not meant for us. Tops and bottoms are meant for market makers. Hence, them being market makers, they make the market. They pick the top and the bottom. We don't want to be involved when we know that they're getting out. Because what's going to end up happening is when they choose the stock, there's no more room to go up, the stock falls very quickly, and we don't want to be involved. Okay, so does everyone understand price target? Are we all clear on what a price target is? Beautiful. Now let's talk about expectations. Because a price target that we see from prints is completely different than the expectations of what have to happen. I'm going to say that again. Okay, so if you want to write it down, or the price target, our expectations of what we see from the prints are completely different than a price target. Okay, can we get a long price target without buying? Overall, if there's no buying, do we get a long price target? No, of course we don't. It needs to be buying. A price target can only be set by buying to the long side because that means that person has to make money. So let's take the same exact example we're talking about right now, and we'll go with expectations versus price target. So we have 5 prints that come in at $5 on the ask side. Our price target is $5.50. What are our expectations of this stock. So $5, 5 prints on the ask. Price target is $5.50. It's going to go to $5.50, but what are our expectations of what the stock has to do? Because remember, a price target is the stock is going to get to that point. Okay, but if we're talking about, first of all, day trading, or we're talking about options trading, just because a stock has to get to that point, does that mean it's going to happen today? It doesn't, right? So our expectations of that stock, as you guys just said, is now to pull back. We're going to start at 25 cents because 5 prints isn't a huge amount. Is going to pull back first before it goes to our price target, okay, of $5.50. Now, if you're in a day trade and you go long at 5.02, what is going to guaranteed, or to the, well, and then there's no such thing as guarantee in trading, but if we go long at 5.02, after our price target of $5.50 and 5 prints at 5, what is going to happen to our position? To about a 90% chance, what is going to happen to our position? Red, loser. It's going to go into the red. It is going to happen because it has to pull back, right? So our expectation has now built a rule on when we're going to look to get in. Now, if the stock does not go to 475 and it starts going up, was that a trade? Or, well, I mean, at the end of it, was it a high probability trade? No, it is not, because it did not do what it's supposed to do yet. So us getting in is literally like betting on roulette on red or black. We know our price target is $5.50, but it did not do what it statistically does over and over again. So us getting in before our expectation has been hit has now given us a very low probability trade. Can everyone hear me okay? Okay, do we understand that? So it did not get to at least 475, which is our expectations of what, and our expectations come from what, guys? Am I just making up rules here, or are expectations based off of what we see happen to the highest percent possible from what we see over and over again? They're rules because they happen 80, 90% of the time. So if that happens 80, 90% of the time, I don't care that our price target is $5.50. Do we take that trade until it moves at least to 475 first? We don't. Because guess what? That now becomes gambling. Now let's use the same example as before. Now we have 10 prints at 5 on the ask side. What is our price target? As we talked about before, price target is $6. But now what are our expectations? What's our expectations of this stock now? Pull back further. Good spot. There we go. A good spot to look at is going to be 450. So from $5, those 10 prints now, we're going to be looking at the stock to pull back to at least 450 before then giving us a trigger near that point back towards the upside. Now, let me ask you something. If the stock gets to 454 and then we get a trigger, is that enough of a pullback? Absolutely. Stock gets to 460 and we get a trigger up. Is that enough of a pullback? Of course. It's not but that it has to be within that vicinity. If we get 10 prints and the stock pulls down to 490 and the stock then comes back up, is that a high probability trade? Absolutely not. Our expectations are what set us up for the actual move itself. So then, you might be, thinking right now, you can have a price target, for 50 cents to the downside, and then 50, and then obviously, to move back up $1.50. Yes, that absolutely is a price target, but if your price target's being set from your expectations, the overall price target is always going to be the highest percentage trade out there. And the reason I say that is because if you don't make money as a trader, what's going to end up happening? You're not going to be a trader anymore if you continue to lose. So we know exactly we end up losing. We're no longer a trader. So that's why when we talk about our price target is something that has to happen. Okay, we know that person needs to make at least this amount of money. Do we technically ever know exactly how much a pullback should be for? What's easier to manage? A stock giving us a trigger up from pulling back to have to get to certain prints, or for us to see certain prints and then see it and then it pull back from there? Which one's an easier thing to manage? If we get a pullback 50 cents on a stock that showed a bunch of buying at $5, we know the stock has to go above $5. Does everyone understand that? Because that person needs to make money on a pullback. Technically on the pullback, they're either adding shares, but they're not making money yet. Do we see the difference here? Does everyone see the difference between that? So that's why our price target comes from a market maker getting into a stock and having to make money. A pullback is coming from them literally not wanting it to go up yet because they're building a bigger position. The more of a pullback, what does that mean for when the stock shows us that it's time to get in? What does that mean for our profits? That's why a stock comes back. That's why stocks pull back on big buying, because it's just the tip of the iceberg. They're bringing the stock back down because guess what happens when a stock is moving down? What does retail do when a stock is selling off? And Eddie, yes, 100% the answer to that question is we're going to make more money. The bigger the pullback from where a stock has to go above, the more money we're going to make. Let's talk about AMD for a second. Okay, now we're going to use this one as a specific example. Okay, so let's take a look at AMD yesterday. Does everyone remember what happened yesterday morning? So let's go all the way back here. Okay. All right, what did we see at 25, okay, and at 25.50 yesterday in AMD? I want you guys should be able to, can you guys still hear me? Okay, if your Wi-Fi isn't okay, then you might be, that might be the reason that you hear it cutting out or anything, or Wi-Fi or service or whatever, phone, whatever you're using. Okay, but we saw great prints. And now when we saw prints at 25, I'm running on college Wi-Fi, that might be it. Okay, when we saw the prints at 25, guys, were there a lot or were there a little? What we have to understand is to build our price target is going to come specifically from the prints that we see. But our expectations on the movement of the stock are what's going to tell us when we're going to be getting into this. Okay, and I'm going to explain myself right now, and I'm going to explain it for everybody. Okay, so how many prints did we see at 25? 25 asked yesterday, a lot, a little. So I don't remember the number because there was just too many to count, and that that will pretty much give you my the answer the answer that I'm looking for. Yeah, there was a ton, right? So the more prints that we get at a level, what does that tell us for the expectation of our pullback? It's going to be a very big pullback and long. I like that answer too, a long pullback, because guess what? The further a stock has to move, especially like a stock like AMD, okay, longer pullback. Remember, a stock only removes so much of a range within a day. So the bigger the pullback has to be, in this case, I mean, yeah, did it trade 300 million shares yesterday? It did. Okay, but on a regular stock that we're seeing out there, when we see these big positions, it's not going to just jump out of what its range typically is. So it's actually going to take longer in time frame as well. Okay, the bigger the volume, the more the stock moves up. So we saw a huge amount of prints coming in at 25. Let me ask you a question from yesterday. Okay, we can see the stock comes down to right about here to 24.67. Where the amount of prints that came in at 25 yesterday was less than 40 cents of a pullback, meet our expectations of this stock now pulling back and then time to go up? Did it meet our expectations? No, right? Too many prints. Remember, just because a stock does something does not mean that's a trade. Does not mean it's time to trade. Did it jump up huge yesterday? It did. But did that follow our expectations and the rules that we talk about every single day? Did it follow it? And because it didn't, remember, the prints are not going to lie to you. They're going to come back. It's going to end up happening where the prints are going to come and satisfy themselves. And the further it gets away from being satisfied, guess what? The uglier the move eventually it ends up making. Now, the prints that we saw at 25 yesterday, is our price target any different from what's going on today? No, same price target. Our price target is set based off of when we see a market maker do something specific. That guy's still got to make his money. But what changes is our expectations. So yesterday, it just started pushing back up, technically getting into this stock on the long side. And remember, I'm talking about overnight and a longer term trade. As a day trader, guess what? I have the option to go in and out as many times as I want throughout the day. I can make 50 cents here, 50 cents there. When a stock starts to get bullied, guess what? I can get into that. But if you're going to take a trade overnight, what rules do you think you should put in place as an overnight trader? Technically, to hold this stock overnight, it never told us once that it satisfied what it was supposed to do. That many prints, that would have been $1 pullback. Think about it, 20 prints. If I told you right now, 20 prints at 25, okay, what would you pull back? What would your expectations on the pullback be? 20 prints at 25. At least $1, right? At least $1. So us getting into a long trade, even though it started moving up, remember, our stock's gonna you have the rules and you have exceptions. Yesterday, it traded 350 million shares or whatever. I don't even remember the exact amount. It was something absurd. Okay, 325 million shares. Look at this volume bar right now. You have two things. You have rules and you have exceptions. Yesterday's volume and movement in AMD, was that a rule or was that an exception? I mean, it's not even close. It's a huge exception, of course. But just because it was an exception that day with that much volume, does that mean the prints aren't going to matter what it showed us it was going to do? Does that change anything? No, it doesn't. It just means that once it's done being that exception, guess what? It's going to come back and do exactly what it was supposed to do. So let me ask you another question. If you're long in AMD today, based off of the prints at 25 yesterday, now keep in mind, our price target, 27.50, it already hit that. I'm thinking overall, the amount of buying that we saw, we're going to get to 30 at some point. Let's just say, okay, and then this is not for taking a trade or anything like that, but let's say our price target is 30. Does that mean that it still doesn't have to at least get down to 24 before it would be time to take this trade long? If you're looking at it overnight, day trading is different. But what I'm seeing is, and especially in the chat room, I'm seeing you guys jump into things. It's not giving you a perfect setup. AMD yesterday, it could have ran to 50. Okay, it could have ran to 50 overnight, but that is not how you're going to become a consistent, profitable trader. You become a profitable, consistent trader by following the rules over and over and over again. It's discipline. Nothing changes. because you want it to change. Anyone ever sit there and look at a stock and just want it to do something? But the prince told you, hey, that's not what was going to happen. So you can want all you want. But guess what? It's not. That's not how you're going to become consistent and can become profitable. You guys, I'm teaching you. If this is your first Traders Exchange, I don't care if it's you've seen every one of them. These rules do not change. You consistently have to build a price target. Okay, first your price target comes, and the reason your price target comes first is because you need prints to make any decisions on anything, right? We need to see some big prints come in. That's why sometimes you guys will ask a stock, like for instance, AAL today. If you're watching AAL, that's fine. You might have a different methodology that comes in. But if it's only trading 100,000 shares today, the chances of it showing anything that says this has to happen are slim to none. It just doesn't work like that. So we build a price target. The reason we talk about Twitter, or we talk SQ, for instance. SQ, I've been talking about this. I can't even tell you how long. It's up $20. I mean, it's just a monster trade that we've been talking about. But the reason we started talking about SQ wasn't just because I like the company. I could give a shit about any type of company. What I liked is the amount of prints that we saw coming into it. Do you understand what I mean by that? So if SQ, I could love that company, but I'm not going to even pay attention to it or even talk about it unless we see some type of string of really big prints that show us this person has to. That's how we build a price target, off of big prints coming in. But just because we know a stock has to go somewhere does not mean it's time to get in. Because right after we see a price target, now we have to build our expectation. AMD was bullied yesterday. Yes, it needed to pull back way more than it did, and it did. Believe me, the chick came home to roost. It always happens. Look at that sell-off that we got. It had to go down first. Remember, market makers, especially on a stock like AMD, think about it: 325 million shares yesterday. The person, the controlling market maker in AMD, how big, if you had to take a guess, do you think their position in AMD has to be? The controlling market maker of AMD, how big do you think their position that they're taking is? Derek, you could be right. I don't know. I don't know the answer to it. But there's going to be a lot of money. Like when I say a lot of money, I'm talking about like you can start a bank type money, that much money. You know what I mean? So when a stock goes up too quickly, they don't want that. The faster a stock goes up without pulling back, the less that they can buy at cheaper prices. It's that simple. And remember, when a stock is going straight up, and this is psychology. When a stock is going straight up, how many retail traders out there want to sell it? When a stock is just flying up, any of you guys like to sell your positions? You'd be nuts. Absolutely not. So that's why stocks don't just go straight up or go straight down, because they have to build positions. And we're talking about an AMD. They're building a position that's just like ridiculous. So if we know this, that AMD has to pull back at least $1, if we get into this stock on the long side for a longer term position above 24, what can we guarantee is going to happen to ourselves? When it does 235 million in a day, less than $1 billion won't cut it. 100%, Eddie. Couldn't say it better myself. You're guaranteeing yourself, exactly, Derek. You're guaranteeing yourself to be in the red and put stress on yourself. You're guaranteeing it. It's going to happen. Does that mean that there's not money to be made to the upside first yesterday? No, I made a ton of money on AMD yesterday, but I'm day trading. Remember, if you're holding something overnight today, when a stock gets bullied today, what happens overnight when it's not being bullied anymore? What's going to happen with those prints? Yeah, it's going to come crashing down. And Derek's question, how do we know when a market maker is done building their position? What rules show us that? Well, one thing that we know for a fact is that we're not getting the buying that's pushing it down anymore. When you stop seeing buying, but you see price action going up, which is basically a trigger, price action and volume back towards where those prints came from. Remember, the only thing that I care about Okay, when a stock is going down, and figure if a stock is being bought, stock has to go down first, is the prints and my expectations from them. Okay, you're gonna see that the buying, the bigger buying, okay, doesn't mean selling is gonna come in, but those bigger buying prints that tell us it has to continue down further aren't going to be happening. Because remember, if a stock keeps getting bought at a level as it's going down, and it tells me my expectations is another 50 cents, is another 50 cents, is another 50 cents, it gets to a point that doesn't happen anymore because they're done building that position. Then we see the stock going back up and boom, we take off. But if every time it hits a level, I know we've said this before many times, but when you're in the chat and a stock just keeps getting bought at the same level over and over and over again, what does that mean is going to happen? So let's say first time 10 prints at $5. Next time, or we'll use AMD, $25. Third time it comes up 10 prints, $25. Then it comes right back up and it hits at 25. What does that mean for our expectation of how far the stock should go down? Remember, we're trying to find a controlling market maker. So that's where we build our expectation of when it should stop pulling back. Okay, if someone only does 5 prints, it's not going to pull back that much because they're not trying to build a big position. Okay, the smaller the position, what does that mean for the time frame? We should expect it to come back up. Should be quicker, right? As long as we have volume, obviously, but it's not going to move down that much because they're not building a huge position. Remember, when we see, okay, this is the best way that I could kind of explain it to you. When we see a huge position being taken, okay, and let's say AMD at 25, 20, 30, 40, 50 prints come in over 1,000 at 25, you have to look at that as that's the tip of the iceberg. Because if they showed you that, think about what the actual position itself is. That's not one person coming in and that's it. Because if you're buying that many shares and showing that many shares, guess what the actual position behind that is? Hopefully everyone knows what an iceberg is, and you see the smallest part is at the top. But when you go under the water, that's where the big, gigantic part of the ice is. And this is what these positions are. That's why when we see great buying, it doesn't mean up. It means our price targeted is up. But our expectations are actually down first before that position is finished being built and then coming up. I can base almost everything that's going to happen to a stock within a day off a controlling market maker showing me their prints. Okay, and there's only a few criteria that goes into it. Number one is the amount of prints that I see coming into it. Okay, because remember, the more prints we have. Why, guys? Why, or when we see anything over, let's 15, 20, 30 prints, why do we take those as longer term prints? What's the reason behind that? And if you didn't know that rule, now you do. The more prints we see in a burst is a longer term position. There we go. It's a bigger position. The bigger the position you have, the longer it's going to take to acquire it. That's simple. So even though yesterday we had 325 million shares in AMD, I understand that. But think about it. If that much volume is coming into it, think about how big the position is. So yes, it should happen quicker, but that's an exception. That's just an absurd amount. When we look for a stock to happen in our move and our expectation to happen a little bit quicker, we're talking about a stock trade that usually trades like 10 million shares on average. Now it's like 12 to 15 today. Not talking about a stock like AMD all of a sudden out of nowhere trading 325 million. That's the rules still apply exactly the way they apply, but you're going to see a lot of things that you don't see in an ordinary everyday stock. So there's sometimes I see these positions that go in, and guys, I don't even look at the options room. I don't, and I'm going to start taking a look at it because I saw some stuff in there today I didn't like. Okay, first of all, I don't like when people gloat at all. So that one thing that's just okay. But I'm seeing a lot of stuff that we could prevent, and that's what this class today is for. Is I want to make sure that you guys understand you have a set amount of rules. Guys, 30 prints in a stock. Okay, let's say at $5. Is it going to move more than $1 down? Almost guaranteed, right? Almost guaranteed it's going to move more than $1 down. So if you take a trade to the long side towards the price target, At least, Darren, at least, and that's a good spot to start. Remember, if we expect a pullback for $1.25, are we going to see that there's actually more room for it to pull back to move to at least $1.50? Are we going to be able to see that? Yeah, of course we are. You can't ever go wrong starting short because the prints are going to show you that it's happening as it goes. But when we see 30 prints and we know it has to be over $1 from that pullback, I don't care if the stock moves $2 up. There is no long trade yet until that stock pulls over $1 from you. Otherwise, what are you setting yourself up for? Remember, trading, literally, the two biggest parts about trading, it's not even understanding how to trade. I mean, to an extent it is. But what it comes down to is it comes down to discipline and game plan. Okay, and your game plan is just based off percentages, which is 100%. And then discipline. Yeah, everyone loves to make money, but guess what's going to happen? When a stock shows us a long price target, once it pulls back, do we reevaluate the target at the pullback? No, target is exactly the same because remember, our pullback that we see should always be geared, our price target, excuse me, should always be geared to the highest big prints that you saw a market maker come into. So in this case, like if we look at AMD from yesterday and we look over here, okay, 27, we had good prints that came in on the S side. So our price target is about 30, give or take, but our price target is always going to be built from the highest position that we see. Does everyone understand what I mean by that? The highest the prints are, our price target now goes from there. So this is a great trade because we know the stock had to go down to at least 24 from what we saw yesterday. So when this stock actually ends up coming back up, think about what it's telling us. How much money are we going to make? This big pullback, it really isn't a big pullback because it was supposed to pull back from 25. That's why these rules are set in place because this is what a stock is going to do. Can anyone here, can you duplicate a stock being bullied every single day? Just duplicate a stock being bullied? Can't, right? Absolutely. I mean, there's no way. You don't know when a stock's going to be bullied. I mean, unless you have a friend at Goldman Sachs that's going to tell you. What I mean by bullied, Derek, is that sometimes you'll see prints in a stock and the stock gets so much buying coming in from it, it pushes the stock up. So our expectations of the pullback don't happen right away. It doesn't happen until the bullying stops, similar to what we saw yesterday in AMD. Then once the bullying stops, what ends up happening is you get stuff that looks like this. You get these huge moves towards that downside. All right. So when we're looking to take a position, we have to build it off the expectations of what we know has to happen. Like I said, 24 at least had to come down to 24. Does that mean it can't go to 22? No, it could. But guess what? We're going to see that as it's coming back down. That still doesn't stop where our actual price target in this stock overall is. So when you're looking to take a position, okay, and especially an options position or a swing trade position overnight, there's certain prices and there's certain times where literally if you get in at that moment, you're setting yourself up to be in the red. You will be losing first. And be honest, guys, because we've all been there before. Who here has got into one of the positions that I've called out before, was in the red, got all scared before it actually ended up coming and doing exactly what it was supposed to? Anyone that happened to here? There you go. Everyone. We've all been there. But it's because you're not setting your expectations. You're making a trade off of a price target, which is only half the battle with these types of trades. Without your expectations being satisfied first, you cannot take a trade. If we know a stock has to move at least $1, so we're talking about $1.50 plus or whatever the case may be. If the stock only moves 40 cents and you get into it, what are you asking for? What are you asking to happen to you? And literally at the end of the day, it comes to you're asking for it to happen. Now you might not take a loss because eventually you might be right. Well, in my case, eventually you will be right in most of the things that we see going on out there, but you're going to be stressed the hell out for days. It could be, it could be a week, it could be whatever the time frame is, but you're going to be stressed out because you're setting yourself up for that. When you see prints, there's two things that you should do from when you see your prints. Okay, the first thing that you're going to do when you see prints is the quantity of one print, 100 shares or whatever option price. I'm not sure what you mean. Is the quantity of one print equal 100 shares at whatever option price? Well, that's contracts. That's option contracts. One contract is 100 shares. But let's talk about the way that you're going to. So this is the flow chart and how your mind is going to work from now on when you see prints. Okay, so let's say we see 20 prints come into AMD at 25. Okay, 20 prints, 25 on the ask in AMD. What's our price target? Minimum conservative price target. What's our price target? 26. Perfect spot to start. Now, Dylan, does that mean that at 26, we can't see that it shows us that we have more room? Of course it can, but that's a conservative price target. Anyone here ever going to be upset making $1 on a stock? Remember, we want to keep this simple. We don't want to try to get a price, for instance, like SQ. I told you guys where SQ had to go. Did I know it was going to move $20? No, that's a pleasant surprise. Okay, when a stock moves way more than you expect it to, guess what happens? You make more money. But you don't want to start off looking. Remember, what you're looking for is you're looking to hit singles. Okay, and everyone here that follows baseball, what happens if you have 17 hits in a game and constantly all game you're hitting singles? What happens to your score? What's the score at the end of the game going to be? Yeah, it is going to be a lot of runs that come in, but they're all singles. We're not looking to hit home runs. Guess what happens when you follow the rules and do things correctly? I promise you get home runs because you're in the right place at the right time. I have two stocks that I've traded before from I don't know about not single, but I've made over $100 on them. Okay, and I'm not talking about $100 in as the stock was, I made $100. I'm talking about one stock went from 41, I was in from 39, and it went to $141 in a day. Okay, LFIN. Did I know that was going to happen? Did I know that was going to happen, guys? Hell no. If I told you that, I literally would be lying to you. No offense taken, Derek. If anyone that told you they knew that was going to 100, lying to you. No way to know that. But guess what? We had beautiful ask prints at 41. I still remember this like it was yesterday. Beautiful ask prints at 41. Stock pulled back, gave me a trigger up, and I got in. Just a regular trade. It was going to move a few bucks. Did I know that the stock was going to 141? No, had no idea. Not a chance. But guess what? I wasn't trying to get make a trade for $100. It just so happened that goes in. When you follow the rules over and over again, you get in the right place at the right time. The only person that knew that stock was going up over $100 worked at Goldman Sachs or Chase or somewhere like that where they knew something was going to go on. But you guys see, we're not trying to go crazy. So now let's go back to it. We have 25 prints that come in at AMD at 25. What's our price target? 26, as we just talked about. Now, what are our expectations? Because until it hits our expectations, we cannot trade it. We know it wants to go to 26. What are our expectations of what should happen? 25 prints should give us at least what? How much of a pullback? 25 prints. Well, see, AMD is a little bit rougher of a stock because it does trade a little bit more. But figure, on average, a rule of thumb, if you see 25 prints get hit on the on the ass side of things, more than likely you're going to get at least $1 pullback. 25. You got to think about that. 25 prints is a lot. 25 prints over 1,000 is a lot. But exactly, Vince, about $1. If we're talking about a stock that has thinner orders and we have 25 prints, it could be $4. That's something we're going to talk about and focus a lot in class, but just as kind of a rule of thumb. It was yesterday at 25, Derek, but I can give you an example of something like today. You want to see something like this. I'm talking about like something like this. That's not something I can show. I posted it. Here we go. Everyone see my screen? Oops. You want to see something like this. Okay, this is a ridiculous amount that came into here. Exactly. That's exactly what it is, a red dress. But the bigger the red dress, the more the movement's going to be. Is the simplest way for me to put it for you. Okay, so when we have 25, we know it has to move at least $1 down. Okay, I told you guys 24. Okay, if we look over here, our low was 24.04, and then we got a trigger up. I mean, if that doesn't make a great trade, I don't know what does. But does everyone see that? So guess what? Our rules told us if you're looking to trade AMD, okay, I know I saw something somewhere, someone averaging down. I'm going to start watching the options chat a little bit because I can save a lot of you guys from doing some things that are just not smart. And when I say not smart, it's just what we're talking about today. It just doesn't follow what it statistically has to happen with the stock. I'm not claiming to be a great options trader. I just know there's sometimes you shouldn't do something. It's kind of pretty much that simple. Okay, but if we look over here, if you get in above, if you're going to average down, with averaging down, well, first of all, averaging down, I want you to be very careful with. I'm not a big fan of that unless you really know what you're doing. Okay, there's times where a stock has continued down and I've built a bigger position on it. But unless you really know what you're doing, just be very careful with going into there. You don't want to take something you were wrong on and make it even worse than it has to be. Okay, but if we come over here and we know it has to, with averaging down, okay, in AMD at 24.50 be a good idea. It's better to get out and back in 100%, Derek. I do agree with that. Or if you're really good at this, averaging down is not a bad thing if you know when the bottom's going to be. For instance, if you would have done it at like 24, I couldn't argue with the logic. Averaging down gets a lot of people in trouble. And the people that gets in trouble aren't the great traders. It's people that are trying to just make a loss into a winner that the stock was a loser in the first place. You understand what I mean? So the stock was a loser. It was a losing trade, and now they're just making it worse. Okay, but with averaging down at 24.50 in today earlier, and I saw this earlier at 24.50, would that be a smart move? Why not? There we go. Our expectations, Dylan, are 24. So anything above 24, averaging down, you're nuts. Does that mean that and I don't even want to keep saying averaging down, but let's say buying, if you were going to buy, okay, today. Okay, does that mean 24.10 you'd be nuts to buy? From what I saw today, that 24, 100% met my that's exactly where my price target was. Was it coming down to 24? No, 24.04 or something like that. That's fine. That's enough. Because remember, it's in the vicinity of that dollar. I saw some ask prints that came in at 25 before. I haven't really been watching. I'm going to have to go back on the prints and kind of focus on this. But overall, has my price target in AMD changed whatsoever? Nope, hasn't, right? Same exact thing it's going to be. I'm just curious how to tell if a market maker is selling this position instead of building more during pullback, or does that even happen in the first place? Well, remember, if a market maker is selling their position, what's going to happen to the stock? Because remember, you could sell 100,000 shares, then to buy 500,000 shares lower, right? Right, Dave? So, I mean, but guess what's going to happen to the stock anyway? What that's telling you is the stock is going down still, right? So either way, it doesn't really change anything. But that happens constantly. Constantly. Remember, if there's not shares available and like a big amount of shares available for people to go in, market makers to go in there and buy, they make the stock go down. Remember, retail is where most of the shares that get traded over the day are being taken from. And what does retail love to do when a stock is moving down? Price action to the downside. What does retail love to do? Of course, sell. So what they'll do is they'll sell 100,000 shares to bring the stock down, and then as the retail is selling off, they'll buy it at a lower price. But it doesn't even matter because of the fact that it's still going down. It's still telling you, no matter what, if they're shorting the stock or they're selling it to then buy it back, it still has to go lower. And our expectations come exactly from the amount of shares that we see. Because remember, if you're going to sell 100,000 shares to buy 500,000 shares, what would your expectations on the amount that the stock is going to move be? A little amount or a lot? Yeah, it's going to be big, right? So either way, we still have a big range to make money on coming through there. But when we see our price targets and we set our price targets, I want you to start thinking like this. Because if you think like this, you're not going to go wrong. Following your expectations, guys, believe me, there's stocks that I just didn't follow the rules that I couldn't get in, that I moved $5, $10 before, and I didn't trade them. I don't care. Guess what? I made my career to be a consistent trader, not by missing things that shouldn't happen, but by following things that should. Okay, we cannot duplicate the exception, but what we can duplicate is every single day in and day out following these rules and making money on them. And as a day trader, if we know the stock has to pull back at least $1, remember, that's an easy short to take. My price target was 24. I put this in the room for you guys. If AMD had to go at least down to 24. It was at 25. That was an easy short to make. But would I want to be caught in it overnight? Absolutely not. Not a chance, because the prints that we saw coming into there were more on the shorter term side of things. I don't want to be caught in that whatsoever. But overall, when we get to a certain point where I don't have to have any more expectations of the stock falling down, it's actually hit the bottom of where my expectations are, that's where I look to take an entry. I was on a conference call. So did you go long at AMD at 24.04? Did you expect further pullback from those prints? No, 24 was the number I would have. I was on a conference call. And then when I have to do I don't know how long it was going to be moving for. I barely was even looking at my computer. But if I would have, 24 was my price target. Right here, you can see it hit 24.04. You guys tell me, 24.04 and this volume and price action right here, what is that something I do 10 out of 10 times? What would I have seen there? And you guys tell me. What was that the perfect setup for? Push to the downside to 24, did not hit 24, and trigger back towards the upside. Failed to hit major level and trigger up. Kevin, what do we do there? As a day trade aspect of it, what do we do there? 10 out of 10 times when we see something like that. We enter a position. We click the button, buy, anything, any different way that you want to talk about it, that's what we do. On the upward trend today, why didn't the prints go to the 2050 print line? What do you mean the 2550 print line? Because what are you talking about as we were coming back up? Okay, because if you were watching at 25, what did we see happen here? What happened at 25? This was right before we started class. Ask Prince. We got prints that came in at that 25 level. So what tells us is that the move up is going to be extended, because remember, when we get prints at 25 and it hits it again, what that tells us is the stock has to pull back. Our expectations are now, our price target's not changing, but our expectations of what the stock is going to do in that specific scenario are showing that it has to go down first. Has to pull back. Remember, all following the prints is it's reading a story. It's not numbers, it's a story. The story tells us exactly what's going to happen, and we trade based off of that. If we were coming up to 25, I don't care if my price target is 50 on this thing. If I'm coming up to 25 and I get a bunch of ask prints, what's going to happen? Black and white, what's going to happen? There we go. It's going to have a pullback first. That's simple. Until that happens, we don't end up going back up. Does everyone have any questions so far? I know I haven't really asked about questions, which I typically do, but and we didn't get a chance to go to Cron, but we'll talk about that a little. But it's the same deal. Cron yesterday at 12:30, and we'll just do this really quick. So applying this to Cron, our price target is 15. How we had huge prints at 12:30, and we saw a pullback to 10:50. Okay, so Cron. Excuse me, throat's getting dry. All right, so we saw Cron get hit at 12:30. How many times yesterday? Here we go. Let's talk about our rules. Yeah, but not a huge pullback in AMD. I'm not looking for, but it's certainly a pullback, which it's doing right this second. 5 times, 6 times. I don't remember the exact amount of times, but we saw 12:30 got hit a bunch of times. What happened at 12? That gave us a price target of about 15. What happened yesterday morning? Let me pull it up so you guys have the visual. Don't remember. Well, if you don't remember, you got to make sure, and this is just, you got to write things down because you don't want to not have those down. But when we were coming up to that 12 and then 12:50, we saw a whole bunch of ask prints, right? Ton of ask prints that came in yesterday. So should this stock have went and just continued up throughout the day? Whole bunch of ask prints. Let's talk about price target, which it showed us. 1250 was our no, this is wrong day. Sorry. Okay, so all right. So coming into yesterday, okay, we saw a whole, was it 1150? I forget the exact number. Let me see. Let's flip my page today. Okay, yes. Well, coming back up from yesterday, we saw the whole prints that we saw coming in. I think it was 11, the actual number itself. Okay, because I pretty much, it doesn't mean anything to me. It literally means, so we have 1250. We have a whole bunch of ask prints that came into here, and we have it hit it 5 times at 1230. Okay, and we're saying 5 times to be conservative. So let me ask you a question. What's our expectations on what this stock had to do yesterday? Remember as well, one of our rules, okay, the more times it hits the same spot and we see that many more ask prints come in, the bigger the move our expectation is of the pullback. So what's number would make sense in Cron for today? 1230, 12. Well, you'd figure 11, right? Remember, you can't go wrong by using $1, 50 cents and $1. You can't go wrong using those because that's a lot of money for a stock to move. But even though it should be more because it hit it 5 times, let's just start with $1, right? So at least, can we agree at least back to 11? At least. Of course, right? What did I say today in the chat room at 11? When the stock came to 11, what did I post in the chat room? And if you don't know, if you weren't watching, that's fine. What did it show us? Because first it showed us at 1150, and then it showed us at 11. Yeah, more selling. So what does that tell us? Has our price target changed, guys? Has our overall price target changed? Nope, not at all. But what it showed us was there's more room to the downside. It's that simple. So if we knew from the prints we had yesterday, okay, now in the morning, keep in mind, this thing popped up and, it showed us some great, it was getting bullied and coming back in. But let's say we're talking about overnight trades. Would it have been a high probability trade getting into this for an overnight trade before it hit 11? Would that have been a smart trade? No, right? So it's not the print's fault. It's not, it's not doing what it's supposed to do, because it's doing exactly what it's supposed to do. You got to understand, and this is something that it's going to help anyone as a trader, you can't blame the market. Okay, it's never the market's fault. It's never the stock's fault. It's our error. That's why these things. Now, don't get me wrong. Every once in a while, something's going to happen that just makes no sense, and that's that's part of trading. Okay, but 90% of the time, that's not going to be the case. Okay, I have examples I can give you for days of stocks that did something that were just baffling. Well, guess what? If that happens twice a year, guess what? The rest of the trades are going to make up for it. But that's what it is. David, I love what you just said. You'd be stressing for no reason. Because from what we just talked about today and what's in every Traders Exchange, I would have to assume for the past, 4 years that we've had ATC. Is this new? Is this a new thing that I'm teaching you guys today? Now, I know a lot of you have taken my classes, which I know we kill this, but even in Traders Exchange, remember, I'm not trying to hide anything from someone. Obviously, the classes are going to go way more into depth about what we're talking today, but is this a new theory? No. So when we see a stock like Cron, so when we see those prints, it has to do it. You're stressing yourself. Now 11, and that's where we started at 11. But just like today, it showed us the prints at 11 that showed us we're going to have a bad time if we're long in this stock. When should we have taken a long position AMD? Me personally, when it triggered up at 2404 would have been a spot that I'd be looking to, I would have been looking to go into it. But remember, when should we go long in the position? The whole reason of this class today is I don't want to even have to give you the answers anymore. You guys, from this day on, and the recording will be up, tomorrow, the next day, someday, whatever, sometime this week. Okay, you don't need me to give you the answer anymore. This is how the stock market works, right? So when we know if we get that many times it hits 1230, we have to go at least 11, right? Is that not a rule that that is set in stone? We know we have that rule, right? So if we know we have that rule, okay, in a stock like Cron or a stock like AMD, you can't go long until 24. Okay, but if you don't see more selling coming in at 24 to show you it's going to go lower, and your price target's up around 30. Is that a good time to go long? Absolutely is, right? So 1050s today would have been a good entry. From what I saw, to be completely honest with you, I thought it was going to hit 10 earlier. I wasn't watching it past 11 o'clock. I thought it was going to hit about 10, but give or take in that area. I didn't see what happened at 1050 right before like noon-ish that came in there. Yeah, the low is 1036. I did think it was going to go, and 1036 a little bit far away from, if I'm expecting a stock to go to 1036 a little bit too far. I want to see it like within 20, 25 cents or somewhere like that. So there might still be a little bit more room down. I'm going to have to go back and I look at the prints. Like I said, I had a conference call earlier today, and I wasn't able to watch what happened as we were coming back in there. But do you see how this works? So when somebody takes a position from now on that doesn't make any sense, what am I going to say? Whose fault is it? That's why I told you guys, that's your fault. It's not the print's fault. It's not the market's fault. It's not the call's fault. The call's going to work out. Guys, since we've moved over to head of the charts, how many times have I been wrong of where stocks went? And I don't ever want to say this to sound cocky, ever, because that's not what I mean whatsoever. But how many times have I been wrong of where a stock is actually going to go? Go watch today's Traders Exchange. That's what you could say. No, I can't remember one. Can't think of one. And it's not because it's just because this is how the stock market works. Okay, there's stocks out there, guys. I promise you, if you had me look at them all day, I'd have no idea where they were going to go. I promise you. But that's not the point of the way that we trade here. The point is to find stocks that I know what has to happen. That SQ calls dirty. All right, guys. So we have any questions? So from now on, when I tell you something, a price target, what's the next word immediately that has to go into your head? There we go. Expectation. Price target is only as good as where your entry is. The expectation is going to tell you where it has to go at least before you're going to be looking into that entry. All right, guys, so hopefully everyone learned something today, and it's going to help immediately within your trading and your expectations of what you're looking to see. What do we got going on out there? I don't really see too much. Let's take a look at our scanners, and we'll see what we have. All right, so AFMD, oh, you know what was a really good one? AFMD, really nothing that I see going on there, they're very quantity, but ATAI actually made a really nice move that I saw coming in there before. The volume's absolutely disgusting and not really much going on at there at all, but $1.67 on at the time, which was under a $2 stock. I mean, that was a beautiful move. We saw that coming before, but not really much that we're going to be able to do anything with. We have CVM, no. It's up on no volume. I have a feeling that for the rest of the week, we're not going to really be seeing a ton that's going on out there. So BRKS doesn't look terrible. It's just the volume. Yeah, it looks like we're going to be looking at mostly everyday stocks. Billy, beautiful buying that came in this morning. And then it made another run towards that double top. Just wasn't able to break it, so not really anything there. Gurn is just never really a day trade. I mean, there's money to be made on it, but just nothing that I can see that I have any type of interest in. And that's pretty much it. So it looks like we're going to be looking at our everyday stocks. I know the CEO of CVM trash. Yeah, so other than that, guys, it looks like pretty much we're going to be watching AMD. We're going to be watching CRRN. We're just going to be watching what we saw a little bit earlier. It looks like things are very slow. Anything else out there that anyone sees? It's a little rough after, I'm for an hour not looking at anything. I don't see anything out there that that excites me whatsoever. Yeah, pretty much looks like it. Nothing. All right, so we're more than likely going to have a slow afternoon. Guys, just be patient. We've made it through the entire summer. We have Labor Day coming up this weekend. We'll be back on Tuesday, and the early next week is usually a little bit slow, but we're right on the border of getting back to where our regular trading comes. And I promise you, there's nothing like it. It just gets so much more fun. So looking forward to that. Once again, I hope everyone learned something today. Make sure you apply it immediately to your trading. You're going to see a drastic difference. And I will talk to everyone for the closing bell meeting. Happy trading.